Kia ora, good morning. Welcome to the Finance Performance Audit Committee meeting of the 3rd of June. We have two meetings running concurrently today. We're going to open with karakia, take the apologies, and then adjourn to the conclusion of the council meeting. Can I call on our Deputy Mayor to open us with karakia?
Morena, Mr Chair, o te rā tēnā tātou katoa. Tū tawa mai I runga, tū tawa mai I raro, tū tawa mai I roto, tū tawa mai I waho. Kia tau ai te mauri tū, te mauri ora, ki te katoa, haumi e, hui e, tā ki e. Thank you, Mr Chair.
Thank you, our Deputy Mayor, ngā mihi. And that will open our day for both meetings. Housekeeping and safety procedures are on the screen in front of us. Fire and emergency, if you hear the alarm, please leave the site immediately, nearest fire exit. And our assembly point is Te Marae o Hine, the clock tower of the square. Smoking and vaping is prohibited. There's a defibrillator located outside the entrance of the customer service on the ground floor. And if there are any incidences, please report them to a committee administrator. This meeting is being recorded. Likewise, the council meeting, and that is on the council's YouTube channel. And any presenters, if they could introduce themselves before they speak. Otherwise, please leave your microphones muted. Now moves us to the apologies. I've got an apology for Councillor Johnson and one for early departure for Councillor Zabellin on Councillor Business. Oh, they're both early departure, sorry, the clarification, sorry for that. Are there any other apologies? Councillor Michelard.
Thank you, Mr Chair. Just to note that Councillor Mark Arnott might be a late arrival. Thank you.
Okay, we'll include him, thank you. Councillor Finlay.
I will be returning this afternoon after lunch via Teams.
Okay, that's fine. I'll move those apologies seconded by the Deputy Mayor and invite a vote. That is passed unanimously, 13 votes in favour. We'll now adjourn this meeting to the conclusion of the council meeting.
Morena no tātou. Thank you very much, Councillor Dennison and everyone. We are now moving into our council meeting of the 3rd of June 2026. Do I have any apologies for the council meeting? Just the Mayor who's on council business, and he will be in shortly. Thank you. Moved by Councillor Dennison. Can I please ask that we vote on that? Thank you. That is passed unanimously, 14 votes. Now to item number 3, the notification of additional items. Are there any? There being none, we'll move on to declarations of interest, if any. There being none, we will move on to our item pertaining to, it's a report, Water's Debt Transfer to Central District's Water, Guiding Principles, Transfer Method and Guarantees. And I'd like to invite the Officer Chris Dryberg up, the Executive Director, Cameron Mackay, GM Corporate Services, and Jacinta Straka, Finance Workstream Lead, Central District Water's Establishment Team. Thank you. And online we have Zelda Gower from Simpson Grierson. Kia ora, Zelda, and thank you everyone. Over to you, thank you, Chris.
Kia ora koutou. Nice to be here again. Here today, definitely in my role as Executive Director for the CDW Establishment Program. I'm not sure that Jacinta's been in the chamber before. Have you? Not sure if been certainly at the table. She's going to take us through most of the paper today. This is her work. This paper has essentially already been delivered at Horowhenua last week, and it was approved there. It will also go to the Rangatiki District Council council meeting next week. 11th, yes, next Thursday. So on that, I will hand over to Jacinta.
Through your worship, good morning and good morning, councillors. So this paper is a key step in the establishment of Central District's Water. It is to approve the debt transfer method, the principles and the guarantees required for Central District's Water to be able to get funding and set up to be well established in advance of 1 July 2027. What I think it's important to say as well that the guarantees are required and they were part of the shareholder process and they're required to enable Central District's Water to set up its own funding with the local government funding agency. And just like those guarantees as well are also required, this council also provides guarantees to councils across New Zealand as it provides funding through and receives funding through LGFA. Zelda is online today. She's been a key part of this process with us, with the partner Josh Cairns, through the process of the commercial finance side of the workstream. So she's here today to answer any specific legal questions or more technical questions that you might have. I wanted to also just clarify that this paper today is not about approving the level of water debt that is due to transfer. While the method and the principles with which we're seeking approval today are really important, the process in terms of approving and asking for approval in terms of the level of debt for Palmerston North City Council to transfer into Central District's Water, that process, as we move through the transfer agreement process, that will be something that you'll receive more information on, and it will become, for example, the debt that you will have at 30 June 2026, that will be approved as part of your annual report in the audit process. You will then we will seek from you in December with discussions with the board as well, approval on the level of debt that is to transfer. But today, the process of agreeing the method and the principles is really important because that helps us to clarify how we're going to work through that process of agreeing the level of debt between now and the end of December, and then again before we begin establishment of Central District's Water in 1 July 2027. What I'd also like just to clarify is this process has been a really positive collaborative process. Myself and the chief financial officers from all three councils have worked really closely together with Pricewaterhouse and Simpson Grierson through this process, which has been really positive. There was unanimous agreement in terms of what we're proposing to you today. We've also worked closely with the chief executives through this process, and a number of you will also have been present at the joint workshop that we had for the first day when the board started, where PwC and Simpson Grierson were also present to talk you through that. So from now, as Chris mentioned, Horowhenua District Council has approved it. The board at their meeting on the 29th has also approved the method and principles, and again, the last step after today would be for Rangitike to also do that. The last thing that I wanted to mention today before I open it up for any questions you have is around this paper, while not seeking approval today, is a good opportunity for Central District's Water Establishment team to signpost sort of where we're heading in terms of this process. So we've actively been managing what is quite a challenging budget, and I know a number of you have had conversations about this. As part of the establishment program, Chris provided an update to the shareholders committee at the last meeting that updated on where the establishment program was at, and we're doing really well. What that means, though, in terms of doing really well, is that there may be an opportunity for us to advance some of the work that we're doing, and that might include some work in terms of the digital program. So when we set the water services delivery plan, initially the assumption was that that work would not be done until year 2 and 3. The total that was included in the water service delivery plan at that stage was 6.3 million. So that digital program, it is a conversation still to come, but I thought it was important to signpost that now, because what it might mean is that rather than that work being done in year 2 and 3, we may seek approval from the board to bring that work forward. What that would mean is that potentially Central District's Water would seek to gain its own line of credit funding with the local government funding agency to enable it to do that work between now and when it establishes in 1 July 2027. What that needs then, from a council perspective, is for a deed of support to be signed to enable Central District's Water to do that. So that kind of information and that approval seeking will come likely at the end of June. It has yet to go through a number of steps to enable that to happen. For example, at the next board meeting, it's planned that LGFA will be seeking from the board approval to join LGFA. LGFA are close to also endorsing that from the local government funding agency perspective. And so it is very likely that we will come to you in June, and there are as I said, a number of steps to go, but it is important that you're aware of how we're traveling and what's likely to come. Lastly, in terms of the budget, I wanted to also just stress the board meetings, those agendas and those papers are public. The last paper where we discussed the finances of Central District's Water Establishment, at the last board meeting we talk about them at every meeting. Those are available for yourselves and for the public on the Central District's Water website. And please, if there's any way that we as a team, and through Chris, can help to inform you, answer questions, or help you to get more comfort in that process, we very much welcome that as we work through the process. So happy to answer any questions.
Thank you, Jacinta. We have a few questions from Councillor Wood to start with. Thank you, Councillor.
Thank you, Madam Chair. 2 questions from me, team. The first one is on recommendation 8 in front of us. 8A, there's a clause in there that in the case of deeds, including guarantees and deed of support to elected members, and in case of other documents, Chief Executive would be there for approval. I just want to understand, when it refers to 2 elected members, does that mean our shareholder committee representatives? Does that mean any random 2 elected members? Does it mean the Deputy Mayor and the Mayor? Who does that mean? Or what is the purpose of that clause?
This is because it's a deed, but it would be, I think normally it would be the Mayor and one other, but at the end of the day, it's not important from a technical perspective which 2 elected members.
Okay. And on page 12, under 3.7, and you referred to it as well in the opening comments around CDW investigating options to fund its establishment, I believe so far we'd been led to believe that simply the councils would raise the debt required for establishment and then transfer it to CDW as part of the debt transfer process. It seems to be new to me anyway, information today, that CDW would garner its own LGFA funding prior to establishment. I just want to understand why go through that rigmarole when we already have a mechanism to raise debt and transfer it to the entity. Why not just do what I thought we were already doing?
Yeah, thank you. Good question. I think we have actually talked about this a number of times, but good question. So I guess we always sort of thought it would make good sense for the board to be able to have a line of credit and then effectively do what you hire a board to do, is make good commercial decisions about investment and what have you. And we see at the moment, as Jacinta signalled, we want to bring forward the money to be able to build the digital systems and, basically starting almost immediately. And just to clarify that, it's not just because we thought it would be a good idea, it was because through the due diligence looking at it, it's been determined that actually trying to leverage off existing council systems isn't practical in any way, and the only practical solution is actually to implement new systems ready for day one. So the way things work at the moment is that we effectively, for all sort of the big external funding, we go through Horowhenua District Council. They were sort of nominated as the lead council. They then pay the bill and then split it out amongst the councils. And as you say, that then can be debt funded and transferred at the end. However, that is actually challenging for our other partner councils, having to carry sort of that debt. So while Palmerston North might be big enough to be able to absorb that unforecast debt, it's a significant challenge for the other councils. So that's sort of one thing. The other way is that it is just going to streamline and make it easier for us to run the establishment process, because potentially the board would have its own access to its own money from 1 July. I think the important thing is this is not about trying to hide away sort of, so that we don't have to give transparency around that. I think the idea would be we'll make it a lot easier on the councils, a lot easier from an established perspective, but the key principle will be is to make sure that we're quite transparent about what we are doing and what money is being spent and where it's going. So this is definitely not trying to hide away funding.
Fair enough. That's a very helpful answer. Just on what you said there around the board's intentions of setting up the organisation and setting up systems and whatnot, given the board doesn't have a statement of expectation yet, what are they using to guide that process in advance of having direction from the shareholders?
Yeah, so I guess at this stage, everything is subject to statement of expectations, but what they're doing at the moment, so they've done sort of base assessment around just sort of operational capability. So you said have a look at it and say, on day one, you need to be able to pay your people, you need to be able to pay your suppliers, you need to be able to take calls and answer things, So there's a number of sort of basic things, and I guess the assessment at the moment is, how would we do that from day one? And the first thing we looked at was, can we just leverage off existing council systems? Others have been able to do that, but they're in quite a different context. We're here, we've got 3 different councils, so you're either, even if you decide, well, let's just leverage off Palmerston North City Council systems, we're then going to migrate the other 2 councils onto it. So at the end of the day, that's quite regretful effort and spend. So that's why that's happening that way. So yeah, it's the things that will come out of the statement of expectation will then be assessed and built into the water services strategy, so that we can demonstrate how we're going to meet those expectations.
Great. Thank you, Chris. Thank you, Madam Chair.
Thank you. Councillor Barrett.
Thank you, Fire. Thanks, Jacinta and Chris and Cam. Couple questions. Just firstly, around the guarantees that we're being asked to create. Are those guarantees only to encompass the transferred debt, or are they envisaged to encompass new debt that CDW would take on?
Through you, Worship, they are required from an LGFA perspective to cover any future debt as well.
How then does that impact back to the guarantor in terms of the credit rating that we might be able to achieve as a council, cost of borrowing, council money, et cetera, in the future?
I might leave it if Cam wants to comment specifically, but in terms of, there is some impact overall, of course, that there's a level of guarantee, but it's also important to mention as well that for any council that has joined LGFA, they are also guaranteeing the debt of the rest of councils across New Zealand. So there's a level of guarantee when each council reports in their annual report, there is a level of risk that each council takes on, an unlikely risk, but still there is a level of risk that each council takes on in terms of borrowing from LGFA, because they do require that guarantee.
Yeah, through Madam Chair, I think that's summed it up to how I would have viewed it as well, which is the guarantee is a requirement of LGFA for any borrower of LGFA debt. The guarantee sits with councils. It's no different to what's currently in place now. In terms of credit rating, giving this guarantee, I don't foresee this being an issue. Given that the debt that's going to go across and be created is debt that was required for the water's activity, and I mean we still to go through the elements of how much control, I guess, is seen through the credit rating agencies for CCOs, but at this point I don't foresee any issues.
So even though the rationale that sat behind local water done well was taking that debt ratio from 250 up to 500, even at the 500 level, do we have evidence that that's not going to come back and influence our cost of borrowing and our credit rating?
My view is I think that's something that LGFA have been actively addressing, because the cost of debt ultimately with them is what they're able to raise through markets and things, and then provide to the sector, and the sector including the water entities. There isn't any evidence to suggest at this point that that's going to cause a negative effect on councils at this point in time.
Thanks. Just finally, how is this actually balance sheet separation when we're being asked to provide a guarantee? Like for a person on the street, how do I tell them this is balance sheet separation when we're providing a guarantee?
Through you, Madam Chair, I guess that there is a requirement under LGFA lending covenants that all borrowers of LGFA are required to have a guarantee. It doesn't show in terms of on the balance sheet. There isn't a liability that sits on the balance sheet. It will sit like you currently have in the annual statements. There is a disclosure to say that the council gives a guarantee and that the total value of the guarantee is X. That's currently the case in terms of all of the LGFA debt that's held for all councils across the country.
Great, thank you, Madam Chair.
Thank you, Councillor. Councillor Johnson.
Thank you, Madam Chair. Thank you. More questions on the guarantee. In terms of the global guarantee, is that basically us agreeing to underwrite any additional borrowing from any other borrower that Central District's Water might choose to do?
Through you, Madam Chair, essentially, yes, there would need to be approval though for each bank to be signed up. So at this stage, the main borrower is absolutely likely to be LGFA, but for each council, for Central District's Water, we are also, in terms of our interest rate swaps, and future interest rate swaps or derivatives, which will essentially enable us to take our floating interest rate debt and make it fixed. Those will require us to sign up with different banks, and so they will require a guarantee as well, and they will come under that global guarantee. So while each council will need to approve which banks they are, but yes, that global guarantee is for any additional banks that we may seek to work with.
Just might make another comment as well. So as we go out and engage with banks and other non-bank lending organisations, there is a possibility of saying, well, we'd like to get some funding, but we don't want to give a guarantee, or as shareholders don't want to give a guarantee. That is possible, but that just comes at a cost. So already we're looking at, so we've done some engagement with the banks, and we've sort of asked for, so if we've got a line of credit, what would the margin be with without a guarantee or with a guarantee, and it is significant. And I guess when if you take, let's say, you have to borrow the money to fund nature calls, which could be, the thick end of $300 million, the margin on $300 million, even if it's, a few points, is still quite significant. So I guess I think from a resident's perspective, the shareholders being able to give guarantees to help support cheaper borrowing for the company makes really good sense, and it basically will just it will land on the water charges. So I get the concern with guarantees and what have you, but at the end of the day, there is a sort of significant financial benefit to residents from having them.
So are we effectively signing a blank cheque here, or will these requests for additional funding come back individually to each council to approve?
So the suggestion is that extending a guarantee to any individual bank would need to come back to council, all three councils, for approval. So that would need unanimous approval of the three councils. So again, that would be something that would be very transparent.
Okay, that's good to hear. And what's the worst case scenario then with these guarantees? Could conceivably Central District's Water fail to meet its obligations and our council be required to repay its debt? Is that what we're talking?
Essentially, yes. So it's no different than any other guarantee. These guarantees work in a sort of a joint and severable perspective. They're working essentially exactly the same as the existing LGFA guarantees. So, for instance, if another council in the far north, let's say, imploded and it couldn't pay its debt, we'd pick up a portion of that, just like everyone else does.
But that would be shared amongst 72 councils, or however many are in LGFA, whereas here we're talking about sharing between 3 councils,
That's
aren't
right. Yes.
Okay, thank you.
Yeah.
Thank you. Councillor Naylor.
Thank you. Just firstly, in 2.2 of the paper, it talks about the indicative debt to be transferred is 268.5 million for all 3 councils. How much of that debt relates to Palmerston North's debt?
Just looking it up.
Thank you.
Might be a second.
Through you, Madam Chair, if you wouldn't mind just giving me 1 minute and we go on to any other questions,
Yeah,
I'll grab
fine.
it quickly if that's okay.
Come back to that. Now, in terms of the 6.3 million you talked about in your opening remarks, when you were talking about the digital program, is that 6.3 million, are you referring to the establishment funding? Is that what's the 6.3 million that you referred to?
Yeah, so that's right. It was the 6.3 when we did the modelling for the decision, and there was an amount for the establishment cost, which is effectively the cost of just running the establishment office, and then it was assumed that the work to do digital systems would happen in year 2 and 3, so that was included later on in the budget. So that what we're proposing is that we bring that forward so that we can build those systems in the coming financial year.
Yep. So is that 6.3, was that just for year 1 or was that for the first 3 years?
It was in that, so that 6.3 would be spent in sort of year 0, so basically the coming year. But it's been budgeted for year 2 and 3, so it would be a bring forward effectively. And the reason being is because the assumptions that were made have proved to not work, and we're not going to be able to delay that.
So the 6.3, did that have digital program included in it originally?
Yes, it did. That's right. 6.3 had it was for the digital program, but not for a couple of years' time. Yeah, so it's not completely new. It's just brought forward out of the budget, the assumed budget and the modelling from 2 years away.
So I'm not quite understanding. So you're saying that the establishment funding is for year 0, but you're saying that the digital program was for year 2 and 3, and that was going to be. So what I'm trying to understand is the establishment funding of 6.3. Did that include the digital program in it? And if so, is that all of that amount or just some of it?
The 6.3 is just the digital
Right.
services, yes, and it
Okay.
wasn't, so, what's the number for the, currently, there was,
4.2, so I think it would be, I would really encourage you to have a look online at the budget paper. It's about 2 or 3 pages long, and it was on the CDW website for the board, because it's quite helpful in that it breaks out what is the council cost at the moment in terms of staff time spent on the project, what are the establishment project budget, and when you ask the question around 4.246 is the level of the establishment budget that was signed off as part of the collaboration agreement, and that was effectively the initial assumption in terms of getting everything set up, hiring a board. That assumed that, though, for example, that the board wouldn't start until 6 months before the organization started, and the chief executive wouldn't start until 6 months before the organization started. And so some of those things have come up in advance, so that 4.246 is the setup. And then on the other side of that, and in the paper online, it helps to define that separately as well. Then the third column of it is effectively then the digital program, which is the 6.3 that Chris, we spoke about. And in the water services, in the collaboration agreement, that included the 4.2, or the cost of getting things going, because in the water service delivery plan, it always assumed that work wouldn't, and in the modeling that went out to the community when we did the Morrison Low modeling that was included in the community conversation, that was assumed that work wouldn't be done until year 2 and 3. So effectively what we're saying now, and Chris talked about, is actually we think some of that work might need to come forward. And so while it's all in there, it's not year 2 and 3. We think it needs, that 4.246 plus the 6.3 is likely all to be needed in advance of 1 July 27.
Okay, and am I correct to understand that will come back in more full information later this month for a specific approval?
Yeah, and it's apologies if we introduced a lot more today than probably but I think it is really important to introduce some of those significant topics and allow you all the opportunity to go online and have a look and familiarize yourself a little bit more, so that when we come, which is likely to be in June, there will be absolutely more information that accompanies that, but at least we wanted to signal that it was coming.
Yeah. So apologies if this question is really for the June paper, but given Council's significant investment in digital program in the last few years, is what we've invested in not something that can be used by Central District's waters? Is it not fit for purpose for what they're looking for?
yeah, that's correct. And I think if you sort of take a bit of a step back and look at the situation, Central District's Water is a very specific infrastructure utilities organisation. So to make sure that it is best set up for success, you're going to need systems that directly provide what that need is. If you look at what say Palmerston City Council's put in over the last few years, it is for a much broader sort of local government organisation. So we've used Civica's Authority Altitude as that big system that we put in. It just doesn't appear anywhere on anyone's map in terms of having the capability for a water entity. So when you've gone through and we've looked across all the various sort of systems and processes, there's basically no commonality across the 3 councils. And when you're looking, there is the odd thing. So we're not just trying to build absolutely everything from scratch. So there are a number of systems. We won't touch the operational technology, the SCADA systems that control, they can all stay. There's some other compliance and reporting systems that they can also stay. So while we're trying to take a very sort of minimum approach, is to do as little as we can. Unfortunately, when it came to the digital systems, we didn't really have a lot of options around doing alternatives. And it also comes down to even if you did do that, it's quite regretful spend, because ultimately you'll be patching something up to sort of get going. Then you're going to have to come back and redo it anyway. So we actually believe we're probably saving money by bringing this forward and doing it now and setting it up for success so that we don't have to do it later.
Okay, thank you. That's all for me, but just interested in that Palmerston North amount.
Yep, sorry, Madam Chair, I do have that. At this point, the indication is about 120 million of that. Obviously, it depends on how the current year and next year's program progresses. So that may change, but that's where we're sitting at the moment.
Okay, thank you.
Thank you, Councillor. Councillor Sabellin.
Thanks, Madam Chair. Chris, just touching on the point that you were discussing before about the digital program, that the digital program would also include the establishment of billing systems in particular, I assume?
Correct. You probably picked the eye out of that actually, and so billing, and discussed it at the shareholder committee as well.
That's what I was going to ask.
And so look, I think we've still got a bit more work to do to really nail down exactly what our path for the for billing is. I guess in an ideal world, again, to get to where you ultimately got to get to, we would put in place a new billing system and have all of the, having that all set up, being able to produce a bill from day one. That's tightly linked with your sort of your customer service sort of interactions as well. Set up banking arrangements, et cetera, et cetera. So that would be plan A, and I guess the advantage that we have is because decisions are being made right now by the board, we've got the potential to, we've effectively got 13 months to do that. Other organisations had maybe 6 or 8 months to sort of get that going. They didn't have that as an option, but ultimately we need to keep open sort of a plan B and a plan C just in case some of this stuff doesn't go well. So we're still working through that.
Thank you. So the benefit of tracking ahead is that we have a better chance of having CD Waters able to bill themselves rather than on behalf of council if we can get cracking on the digital work earlier than anticipated.
Yeah, that is true. And so there's a couple of big entities that are going live on 1 July 26. Both of them, their biggest sort of risk factor is their having billing ready. Both of those are billing through their shareholder councils. And so just to say that while it sounds like a really nice option, I'll just get the councils to bill for you in the meantime, the amount of work that they've had to go through to make that actually work has been pretty horrendous. So I guess, and costly and distracting for the council. So I think it would be, in an ideal world, we'd go new and have that all set up, but we just need to have some backstops just in case, because like I said, one of those things you need to do on day one is to be able to
bill your customers.
Yeah.
I'll just add one item. We are, though, it's important to mention that each CFO is due this week to present a proposal back so that we fully understand what it would mean if councils did bill on behalf of Central Districts Water, what resources would be needed, what it would cost, so that when decisions are being made, because they haven't been made yet, but it might sound like they are today, but it's more just signposting some of the things we're thinking about and setting ourselves up for in case those decisions are made. So absolutely, each council at the moment is putting their proposal together in terms of what it would mean resourcing and cost-wise if that were to be the case, both from a first decision point, but also to have it as an option B if things didn't go well as well.
Thank you, that's helpful. Thanks, Madam Chair.
Thank you. And the last speaker for the moment is Your Worship, the Mayor. Thank you.
Thank you, Madam Chair. Look, thanks, Jacinta, Chris and Cam. Just trying to find the finances, looking all over the place on the website and haven't located them yet. So it'd be good to have that perhaps a little bit clearer, and maybe even in these papers when they come to us.
Okay,
because
we'll do that.
I've spent 10
No,
minutes
we'll
looking for it and I can't find it. Secondly, your billing system, and totally understand your change on what you want to do there. Are you going bespoke or are you talking to others? Because, there's 40 of you around the country. I'd hope that you're doing something that's a little bit more joined up.
Yeah, thank you, Mayor Smith. That's an excellent question. As a sort of a general principle, when we've looked at digital systems, one of the sort of guiding principles has been basically follow the pack. And I think we're quite lucky in that, you know, some others have already gone ahead of us, Waikato Water, EOY, Te Aki Wai, Selwyn. And so there is already emerging a fairly tight sort of, you know, answer to what the sort of the go-to systems would be. When it comes to billing, we would potentially be the first one to make a choice, so that is a much harder decision. But there are some likely options in terms of things that would certainly integrate very well with whatever the other systems are potentially, you know. So that will be key in our thinking as we make that, but we haven't quite made that decision yet.
And how would I say this? Can others be added to it? Is it going to be something that you'll be able to add partners to?
Yes, again, excellent question. And one of the key reasons, well, there's a couple of good reasons why you want to effectively, like I said, follow the pack and have systems that are the same. And when I say the same, not only are they the same brand and the same flavour, but they're set up exactly the same, they work the same, everything is identical, and that way you set yourself up really well for shared services down the track. So if we've all got the same billing system, you can imagine we may be able to club together and have, you know, one shared service that manages billing across, you know, multiple entities, and, you know, there's lots of other examples, but definitely that is, you know, we're very aware that, you know, costs are going to come under huge scrutiny, so any opportunity to save money by, you know, sharing resources will be welcomed.
And just a random question, how much money's been spent to date?
On across everything?
Yeah.
I think it's 960,000. We haven't done in terms of the close of the May month. That I don't have the final numbers from all three councils on that spending yet, but I think it's 969 was at the end of April.
Okay, thank you.
There been, we have another question. Councillor Naylor, thank you.
Just a quick follow-up, because like the Mayor, I haven't been able to find those documents on your website either. Is there any clarity you can give us to where we would find that?
I just emailed Hannah and said I will send absolutely as soon as I finish, and apologies for it being difficult. I will send out a link to everybody.
Just to let you know that the governance lead has sent that already to all councillors. Thank you. There being no further questions, I'd like to thank Cam, Chris and Jacinta, and also Zelda, ngā mihi kia koutou. And we're now going to be looking at the recommendations to council as per the agenda paper. Recommendations to, and I'm not going to read them all out, but I am going to say with regards to 1, A, B, C and D, 2, 3, 4, 5, A, B, was subject to A, B, C, D, A, B, C, number 6, 7, 8, A, B. So I'm happy to move it, seconded by His Worship, the Mayor, and open for comments. Thank you. Councillor Johnson.
Look, I am going to support these recommendations, but I don't feel entirely comfortable with them, in truth. I think we probably have no choice at this point in the matter, and I understand the answers that we were given, that providing guarantees will lower the cost of borrowing and therefore make costs lower for residents. And that sounds good, unless we were called on to have to provide a guarantee. In which case it's not quite, I know the parallel has been drawn with LGFA, it's not quite the same as LGFA, because this is a collaboration between 3 councils, not 70 odd. And so I think it feels to me as if perhaps the risk hasn't particularly been well acknowledged in this paper, or it's maybe been downplayed. And I understand this isn't the actual decision, this is the kind of in principle thing. But in future papers, I'd like to see a lot more around assessment of risk, the risk of acting, the risk of not acting. Because, you know, if we're to make genuinely well-informed decisions, we need to have those things spelled out. And I did find this a paper where, you know, I had to read it quite a few times and then ask some questions to just be sure that I had understood it correctly. So I hope that feedback is helpful to those who are writing these papers. And I understand we're in a process and we probably have no choice. But it just feels a little bit uncomfortable when we hear, well, we're going to be needing additional borrowing to do the setup, and you're going to be guaranteeing it. And I don't know, it's just feeling a little bit loose to me. So I'll just put that feedback in at this point. Thank you.
Thank you very much, Councillor Johnson. Councillor Harpiter.
Thanks, Madam Chair. I'm of the same mind as Councillor Johnson, but mine is more around specifically is number 8, and I'd like number 8 to be separated. I can't vote for anything that talks about a guarantee, and it's more of a personal thing for me, so I won't be supporting number 8. So just ask for it to be separated. I won't support anything that has the word guarantee in it. Thank you.
Thank you, Councillor. Councillor Zabelin.
Thank you. I did have had similar thoughts about the guarantees myself, particularly given that we will not just be parting with the debt, but we'll be parting with our asset base on our balance books. So our ability to leverage debt ourselves may be hampered by that, and providing a guarantee when we're missing a lot of our existing asset base is some cause for concern. But I do understand that that's the way the system works, and for this to get up and running, that's you know, that's how it has to be. I thought that the joint workshop that we attended, gosh, it seems a while ago now, but explained really well the process of novation to us, and how that had been come about as the recommended way to do this transfer, and the principles I think had been well explained. So I do feel like we'd had some good information as to the why and how of the technical aspects of transferring that. So I wanted to thank the officers and the consultants who helped us with that. And I also wanted to note at our shareholders committee meeting held in Horowhenua, also it seems like a while ago now, but it was probably only a couple of weeks, we had an update from Chris about how much work had been going on, and that many work streams are tracking ahead of time, and that we're in a better position to get going with things than we had anticipated, which I just wanted to acknowledge, because there is a huge amount of work that's going on behind the scenes to deal with many layers to get us to this. And it's just really heartening to see that we might need to get some money behind CDW more earlier than we expected, because they're ready to go with a lot of things. And I'm ultimately very motivated that CDW do their own billing and that council don't. So if we can be in that position and we're already tracking ahead of the game on that, that's very heartening to me. So I just want to thank our Waters Transition team, because they're doing a phenomenal job in a really difficult, complex and fast-moving situation. Thank you.
Thank you, Councillor Zabelin. Your Worship, the Mayor.
Thank you, Madam Chair. Look, thanks to the team. Can I just suggest that with such big decisions that we do have the budget in here, it's taken a while to find it, and even when I got the paper, you're sifting through about 100 pages worth of documents. So please, it's such a big decision for us that we just have that right at our fingertips, and it's a pretty simple thing to do. But look, I'm going to support this. I appreciate the comments that have been said. I don't think we've got a lot of options but to do this, so hope you support it. Thank you.
Thank you. Councillor Barrett.
Thank you, Via. My comment is in two parts. Firstly, to thank the team that presented this morning, especially around the work to signpost some of that future work. We're all entering into some new territory here in terms of us as council working with a new jointly owned CCO, and that entity, Central District Water, is actually blazing a path in terms of a new model for water services delivery. So everyone's on that journey, and it's just really helpful to have the heads up and the information in advance as we build a constructive and strong working relationship with CD Water. The other thing that I'd signal is that it was an interesting paper to receive, because certainly the messages that I thought I heard a year or two or three ago when we started talking about these kind of things was that, yes, the assets are going, but hey, the debt's going as well, it's okay. Well, turns out the debt hasn't really gone very far at all, has it?
Thank you, Councillor. Councillor Dennison.
Thank you, Madam Deputy Mayor. Just in regards to quite a significant moment, actually, moving again with these steps. They are significant moments. The city will look back in the time and say these are quite key. And so I just find that in that last recommendation that's been separated around the guarantees, around just having 2 elected members as able to sign off on a deed like this, I think we should lift the status of expectation. I think that's a great question by Councillor Wood, that it should be the mayor and one other. Just to give it a bit of rank, it just seems very casual that we just have 2 members, and that would be the expectation, I think, from the public, to have the mayor and one other. And I'd like to make an amendment, unless that's agreeable to, before we get right around the meeting. The other point I was just looking out, because we're talking about the financials, we had in response, in the report to the board of directors, it looked like the total money spent to date was 13.36 in the paper, and I was just surprised the response was more around 9. I'd love to have that clarified. But again, I think as long as these board of directors are over the financials, there's a lot for them to get their head round. And I take the concern around wanting to kind of bring us along with it to get some assurance for, I guess, us as elected members, for our public, because these are big numbers. The guarantees are not a new thing. That's used regularly in business, and many would know that. And so for this purpose, it's the rationale for it is very fair. I've got a high level of comfort that if there's any other lenders that would need to come back for a guarantor again for the extended lending through other lenders. And so, yeah, comfort, and I'm just wanting to see how we might navigate. Is it an amendment, or will we take it off an advice? Otherwise, it's happy to be seconded by Councillor Naylor.
Thank you. Just for clarification, Councillor Dennison, we will move 1 to 7 and then we'll deal with the amendment. And thank you. It's noted that you moved the amendment, seconded by Councillor Naylor. Thank you. Moving to Councillor Wood. Thank you, Councillor. This machine doesn't like my finger today.
All right. Thank you, Madam Chair. Just briefly, I think this conversation we have is really important, or that we're having is really important when we're considering our long-term plan in a new accounting environment where some debt that our residents are responsible for is held within the council's books, and some debt that our residents are responsible for is held within Central District Water's books. It is a little bit of off-balance sheet magic, because really, at the end of the day, the same people are responsible for it. I hate to say it, Councillor Barrett, the debt was never going very far. It was always going to be the same people responsible for paying for it, the same people responsible for guaranteeing it, because what would this look like without a guarantee from council? There's only 2 mechanisms. Either, if Central District's Water was to fail, they would have to sell assets, or they would need to be empowered by government to recoup costs from ratepayers, just as we're currently empowered by government to recoup costs from ratepayers. They are the only 2 ways in which debt can be guaranteed in this kind of organisation. And given I wouldn't want to see a world where Central District's Water had to pay higher interest costs because it had a lower level of guarantee, and that its fallback was selling our water assets, I much prefer a mechanism where council guarantees it, and yes, worst case scenario, our ratepayers do have to stomach the cost for that debt, but how is that any different to what the current guarantee is on our water debt that we have today? I appreciate the technicality of difference between LGFA funding being 1 council spread across 75 versus 1 council spread across 3. I understand the difference in mechanism there, but in practice for our residents, they're going to be responsible for this debt either way. And so what I would encourage you, councillors, as we go in to our long-term plan discussion, we cannot get caught up in the grandeur that, oh my goodness, we've now got all this additional debt headroom because it's been put on another balance sheet. We have to remember that the debt has not gone very far.
Thank you, Councillor Wood. With no further comments to make, I'm going to put to the vote the recommendations, as per the agenda for items 1 to 7, and ask that we vote on that. Thank you. And that is passed 15 to 1. Thank you. We now move to the amendment. So the amendment that will be up very shortly, that the council approve the execution of the LGFA guarantee and global guarantee and all such other ancillary documentation as required in relation to the implementation of guarantees on behalf of council by A, in the case of deeds, including the guarantees and deed of support, the mayor and one elected member, and B, in the case of any other documents, the Chief Executive. That is moved by Councillor Dennison, seconded by Councillor Naylor, and I ask that we vote on that. Thank you. And that has passed 14 to 2. That concludes, oops, in my anticipation, sorry. And now we'll move to the substantive. Thank you. That being that the council approve the execution of the LGFA guarantee and global guarantee and all such other ancillary documentation as required in relation to the implementation of the guarantees on behalf of council by A, in the case of deeds, including guarantees and deed of support, the mayor and one elected member, and B, in the case of any other documents, the Chief Executive. Can I please invite you to vote? Thank you. That is passed 14-2. Thank you very much. That concludes this part, and I'd now like to just take a minute or two while the Mayor takes his place at the table. Thank you, everyone, and thank you, officers, and those who've made presentations. Kia ora te ao CE.
Kia ora tātou, welcome everybody, and apologies for lateness this morning. I just had to entertain some government ministers at Tutanganui, so probably more on that later. Through to number 7 of our order paper and around the 2026-27 annual budget adoption, and on page 17 of your papers, I'll invite Cameron Mackay, Steve Patterson and Scott Manser to the table, please.
morning, Your Worship and councillors. So just a brief introduction from me. As you recall, post your deliberations in May, you asked for some options and reductions to the budget, and particularly to try and achieve a 3.9% rate increase. What you have in front of you today is a budget that achieves that outcome. Should you agree with the items that have changed to get us there? Just to give you a bit of how the process could work. If you did agree to how the budget is presented, you would be in the position today to be able to adopt the budget and therefore set the rates and so forth. However, acknowledging that you did want to see those as options and for your consideration of what's been identified, should you wish to make any amendments to what's in front of you today, that would mean that we would have to come back at the end of June for adoption. The reason for that is the way in which the setting of rates is calculated. It's a very specific rate in the dollar calculation, and of course, if we start making changes to the budget, that will change. Just some brief points just to cover. There's been some very recent changes to external contracts which have been reflected in the budget and in the paper. Just to note that that's had a net reduction to the remuneration budget slightly. That's explained in the paper. In terms of where some of the bigger changes have occurred to achieve this budget, we've had updated information from our insurers in a positive light, where it appears that our insurance premiums aren't going to increase at the same rate as what we had assumed, and so we've been able to reflect that updated advice into these papers. There is the reduction to the wastewater budget. Just want to clarify that a wee bit, that is still an increase to that particular budget from the current year, and in the current year, looking at where we are year to date, we have a favourable variance on in that particular area, given that there is a lot of change happening in that space as well. It would be difficult for us to suggest that a significant increase to that budget would be achievable next year, so we've revised that downwards. There's been some slight reductions in renewals that you will note. The key rationale behind that is, as you're aware, our 3-year rolling renewal calculation looks at the 2 years beyond next year. We've taken a look at, if Central District's water is being established, there is some support renewals that the council won't necessarily need to replace because the staff won't be within the council organisation to use those. So we've made adjustments to that. Finally, just want to acknowledge the broader team across the council and some of my staff in this. It's always a challenge when we do try and turn this around quickly, but I think through the good work of the people that have found these opportunities and looked at our current year position and made some adjusted assumptions for next year, I think this is a reasonable place to land. Happy to take any questions.
Okay, thanks, Cam. Councillor Wood.
Thank you, Mr Mayor. Thank you, team, for the paper. Going through these tables, first can I just clarify, all of these tables in the paper are new information or changes from the budget that was presented in May, correct?
Yes.
Okay, so I note in here that table 3, there's a $347,000 income increase for the contact centre, and then table 5 outlines an increase in wind farm royalties, increase in infringement revenue, increase in rental revenue, etc. When we get to table 8, which looks at a comparison of the components of the rate increase from May to June, it shows that the revenue excluding rates has decreased from 1.3% offset to a 1.2% offset. By my calculation, a $957,000 income increase should change that from a 1.3 to a 2% offset. Can you just explain to me why that's not being reflected in the overall figures in table 8?
Yeah. Excuse me. Morning, everyone. That's a really good question. Your maths is good. However, table 3 is a reduction table, so it's a decrease of 347,000.
Decrease in revenue, right? That's where I've got myself mucked up. But still, in saying that, I don't understand why our revenue should be decreasing when we've got well more than that in table 5.
Through you, Mr. Mayor, when we talk about the changes to external contracts, whilst that's been, I guess, net favourable through all those changes, the MDC contract, which is not progressing, had a larger cost base and a larger revenue base.
Right.
So in terms of when you gross these things out against the respective lines, I think that's probably the other piece to your equation.
Okay, and can I understand, so obviously councillors, when seeking to reduce the rate increase, couldn't put up a recommendation to increase our revenue assumptions for lines because we take it on authority that the revenue assumptions you've given us are correct. How have we found ourselves in a position where in table 5, to do some relatively quick maths, we have over $500,000 of additional revenue that we didn't expect? Is that money that we would have seen reflected simply as a favourable performance against budget throughout the year had we not put those requests in?
Yeah, through you, Mr. Chair. I guess what we ended up doing is we also looked at where we are in the current year position. So you recall through your regular updates, financial updates, we are ahead on revenue much further than what we probably anticipated. We did increase revenue budgets as part of the original drafts, but upon reviewing exactly where we are, which is quite close to the end of the financial year now, we've taken more of an aggressive, I guess, approach to that. There is always the risk that some of that increased revenue won't hold, but that's considered low given where we are right here, right now.
Okay, and just to make sure I'm clear in my mind, the risk that leaves us in is that if this revenue wasn't to materialise, that's debt offset to an underfund of rates, rather than what we do at the moment where we have a surplus, then that goes against paying off debt.
Yeah, so what will happen in the current year is because of the surplus that essentially any leftover cash will go against the debt position. In a year where there is a deficit, the opposite does occur. However, our first approach will always be to try and live within the budget that is set for us.
Appreciate that.
Or otherwise we will be coming back to you and outlining where we might have some challenges.
And my final question is just regarding table 8 on the rolling average renewal increase. That's gone from, that's a negative 0.5 to negative 0.2. That explains my question. Don't worry about it. Mr. Mayor.
Councillor Johnson.
Thank you. My question just relates to table 5 on page 25. So we've got a line there where we're expecting increased rental property revenue. And I just want to check that that's been achieved without additional increase to rental costs for tenants.
Yes, that's correct. As Cam's just outlined, we've had a look at our current year actuals and we've always been slightly favourable in that budget, so now we're just correcting the budget to be in line with what we're actually receiving.
Okay, so we could describe that as more accurate budgeting rather than putting in an increase.
Both are correct. We have put in more revenue and we have updated the budget to be more accurate.
Sorry, that wasn't a very good question. In other words, your ability to predict increased revenue in that particular line is not because you've decided to increase rents more, it's because you've looked at your budget lines and decided that that will be a more accurate reflection of current rents.
Yeah, through you, Mr. Mayor, that would be correct, correct, reflecting that there would have already been some level of increase expected with inflation.
Yes, thank you.
Councillor Harper.
Thanks, Mr. Mayor. Thanks, team. Just two questions. One's about the MDC contract. Are we being a bit short-sighted in our determination to take that out of the budget when that could potentially come back to us, that contract? Just asking a question.
I'll get the CE to respond to that.
Through Mr. Mayor, if it was to come back, it won't be inside the next 12 months.
Okay, thank you. Second question, professional services. This might be a question for you, Mr. Chief Executive. 602, taking that amount out of professional services, what will that impact?
Through the chair, Cam might assist on this. He looks like he wants to. I think that we've said in the chamber before is that if there were any particular projects that required any other external professional services, we would just bring that back as a report to you at the point in time that it might be needed as part of the project. Otherwise, we'll be living within the budgets that we have.
And finally, just to be very clear, CEDA is not losing 104 in funding?
Through Mr. Mayor, no, it's not. It's simply, upon our detailed review, found that it was coded against professional services, so we're putting it against the more appropriate budget line description.
Thank you. Thanks, Mr. Mayor.
Councillor Barrett.
Thank you, Mr. Mayor. A couple of questions. Page uncertain, but table number 9 at the end, shows 45 million in debt coming on in the year ahead. I've heard numbers out in the community circulating as high as 100 million. Was that ever the case?
I don't recall us ever suggesting that we were going to increase debt by 100 million during the budget process. Whether or not in the LTP, because of where nature course was expected to pick up, I don't know, but certainly not in this budget process. I don't recall figures of that magnitude.
Thanks. And this 45 is different from the 35 that comes in the debt raising paper that's a bit further down the agenda. What's the $10 million difference there?
So table 9 is the funding of the capital expenditure program, whereas the debt paper shortly is the actual cash needed, which is net of all the borrowings and repayments.
Great, thanks. So the actual number is 35 in terms of new debt coming in?
Yes, that's correct.
Yeah, okay, great, thanks. Renewals are, to my mind, unfortunately down. Does that mean we're all caught up?
Sorry.
Does that mean we're all caught up on the renewals? We don't need to invest as much anymore?
That's Mr. Mayor. I would suggest that when we're looking at our renewals, there will definitely still be discussions as part of the long-term plan around what is required. You've already committed to further investments in footpath renewals. I would suggest if the funding was, I would suggest if NZTA were funding more in the transport space, you may be pushing to do more in the transport renewal space. Yeah, I think that's a journey that we are still on. Certainly, in terms of where the renewals are at, we haven't reduced any renewals in that sort of core infrastructure area.
So where have the cutbacks come, given that presumably costs have gone up? So where are we likely to see less renewal delivery?
Just to clarify, so the funding for renewals, whilst that is slightly lower, the actual renewals, which is at the top of table 9, has increased to 36.4 million from the current year of 34.3 million.
So how is that then in terms of?
The reason behind that, if you recall, in previous draft editions, when we looked at the funding of renewals, there was quite a spike in water-related renewals in years 2 and 3 of the funding calculation.
Mm-hmm.
Given that waters will be transferred and funded in a different way, what we did was we decided to hold the level of funding at the existing level for next year, as opposed to push that spike through, because at the end for the renewals for those years, that will become Central District's Water's responsibility.
Cool, thanks for that reminder. And just more on the details into the spectrum, in the recent Community Resilience and Sustainability Committee meeting, there was a direction around Heritage Reference Group acknowledgement payments, and it was subject to inclusion in the annual budget. Just want to double check that it is included in the annual budget.
Sorry, can you just remind me what that payment was specifically for?
I'm not sure the sum, but we have the Heritage Reference Group has acknowledgement payments associated with their participation as a Heritage Reference Group. And in our 20 May meeting, there was a recommendation to Council about supporting those acknowledgement payments, but it was subject to inclusion in the annual budget. Just wanted to double check that inclusion's been made.
Yes, there is. We have the provision for all the reference groups, which I assume that one is part of.
Excellent, thank you, Mr. Mayor.
Councillor Naylor.
Thank you. Just in the third recommendation, noting the confirmed remuneration budget has reduced from 65.9 to 65.6. At the annual budget meeting, there was a resolution that kept the amount at 65.9, and I'm just wondering if that direction translates through to the next, to the newer amount, or whether there would need to be any wording if we wanted to continue that practice of having that amount capped.
Through Mr. Chair, I guess that's a decision for the council. However, I mean, our practice has been is to try and live within the means that we have, and if we are encountering any problems, that they would be signalled to you through our quarterly reporting process. So it's certainly not to have an open checkbook, so to speak. It's to say, well, this is what we need for next year. Like any budget line, if we have any challenges, we would need to come back to you on that.
So where it's left at the moment, I realise there's reporting, but the shift to the current practice is that there has been more of an intentional effort to keep it within that limit, as opposed to the prior year where it went over by about 2 million, I think. So I'm really just wanting to understand, with the current recommendations as they are, is it a budget of 65.6 but capped at 65.9? I mean, how does that resolution in May stand now if we change the budget amount? That's what I'm trying to understand.
My take is that your intent would continue to stand as per the resolution. Would be my take on that.
So it would stand with the new amount?
Yeah, I believe so. Yes.
So we don't need to change anything?
Through the chair, the resolution you made is quite specific. It's 65.9, so that's the cap. What we've done is that in order to achieve a 3.9, it's mostly around the MDC contract and those sorts of things. It's reduced the remuneration budget. All we're doing is we're saying the remuneration budget's now sitting at 65.6, but there's a cap on it at 65.9.
Okay, thank you.
All right. Okay, that's questions done. Thank you, Scott. Thank you, Cam, and others that have fed into the process. All right, we have some recommendations to Council. One, that Council A adopt the annual budget plan for 26-27 as a total rates requirement increase of 3.9%, and B, delegate authority to the Chief Executive to authorise payments to council-controlled organisation and other external organisations in accordance with the respective SLAs, the service level agreements. And C, note that the confirmed remuneration budget has reduced from 65.9 million to 65.6 million. And D, confirm the adoption of the annual budget plan 26-27 as a significant decision with the parameters of the LGA 2002, and that Council is satisfied that all submissions have been considered and that there has been compliance with decision-making consultation requirements of the Act. I'm happy to move that, second by the Deputy Mayor, and I'll open it up for comments. Councillor Harper.
Thanks, Mr Mayor. I'm very proud to support this budget, particularly as it's sitting at 3.9. I think the officers have done a fantastic job with the budget to 3.9 and congratulate all of them for doing that. So thank you very much for doing that, and I'm very proud to support this budget, so I will be looking to vote for it. Thank you.
All right, I'll do a right reply then. I'm surprised. Look, colleagues, it's a balanced budget. And I acknowledge the staff, and especially the CE and SLT, the senior leadership team, that have looked for further savings. We're keeping the lights on. We're looking after what we already have and doing what we absolutely need to prioritise. But at the same time, noting that it is pretty tough out there at the moment, and 3.9, which is really 3.3, plus the 0.6 fuel surcharge, is where we come in at 3.9. So I hope you support it, and again, just thank you to those involved. We will vote. And that has passed 12 votes for and 4 against. All right. All right, we'll break for a cuppa, and we'll be back in the chamber at 1:45. Thank you. Okay, just moving on with our council meeting this morning, and we've got up to number 8 on our order paper, and it's around setting rates of, or for the 26-27 year, and I'll invite Steve Patterson to the table, page 33 of your papers, councillors. Steve.
Yes, good morning, Mr Mayor and councillors. As you've now adopted the budget, the law requires you to do that before you can set the rate, so that's been set. So this report's been written on the assumption that you would do that, and the figures that are shown in here are the same ones, obviously, that we've got shown in the funding impact statement part of the annual plan that you've just adopted. I guess I don't think there's anything particular that I need to draw to your attention. Hopefully what we've shown here is enough for you to understand the implications for rates distribution that will occur as a result of applying these rates.
Okay, thank you. Councillor Naylor.
Thanks, Steve. Just my question relates to page 47, the budgeted movements and rates for non-residential, commercial, industrial, and the right-hand end of that graph where the amount of, am I understanding that correctly, that that's perhaps, 470 odd ratepayers in that category that would be paying more than $1,000 more in their rates? So 347 plus 71 plus...
Yes, correct.
And is the predominant reason for that the move from land value to capital value, that last step for that?
It's a contributor, but it's also the movement from the land value to the capital. The change in the uniform annual general charge is one contributor, and the other is the movement to a greater share on based on the capital value.
So if we hadn't have changed the UAGC, how different would that graph look? Would that be slightly...
it would be slightly less. Yeah, there was about $1 million overall that was moved by that change, and I did have a graph here somewhere that showed that. But yeah, it's in the big scheme of things, I don't think it's that significant.
You don't think it's that significant?
It's not so significant as to be a concern in my mind.
Oh, you mean the UAGC aspect of it?
Yes.
So, because all the other graphs are quite symmetrical, and that one just has that big blip at the end, I'm just really wanting to understand if there's anything else contributing to that.
I think the commercial and industrial group, it's hard to say what's the average because there's so many different types of property in that group. Some of them are ones that are on maybe quite large chunks of land, but the improvements are not significant, whereas there are others that might be on a smaller block of land where there's very significant investments, and so there's nothing really in the way of a standard property, if you like. And so there are some, and probably ones up that higher end of the scale, where the ratio of their capital value to their land value is quite high.
Sorry, just one further. So in terms of that non-residential, commercial, industrial section of the community, are they still paying a similar percentage of the rates that they used to, or is there a piece of the pie change? I'm not sure if you have anything that shows that in here.
Let me just remind myself. Sorry, I don't have that right in front of me. It's slightly more, but not significantly more.
So the overall percentage increase for commercial and industrial will be slightly higher?
Yes, it will be higher than the, well, as you can see, there's quite a range. Roughly nearly 40% of them, which is a similar proportion to the residential, actually end up having a lower rate.
Yeah.
and 60% of them a higher rate. So the ones at the higher end of that higher rate are the ones that have got the high capital to land value ratio.
Okay, thank you.
Councillor Johnson.
Thank you. Yes, also a question on the blue graphs, I suppose, on page 46 for single unit residential. It seems that there will be something over 11,000 properties that get a reduction in rates rather than an increase. Is that a correct reading of that?
Yes, 11,330
Yeah.
odd.
So do you have a graph that shows where the property values sit on those ones? You know, whether they're proportionately which median they might sit in?
No, I don't have that with me. I could probably generate it.
Okay. Oh, I'd be interested to see it, you know, at some point if it's not too hard to get. Thank you.
All right. Thank you, Steve. That's our questions done. So colleagues, we have recommendations to Council. 1, that Council adopt the resolution to set the rates for the 26-27 year attachment 1. 2, Council note the setting of the rates is a significant decision within the parameters of the LGA 2002 and that it is satisfied there has been compliance with the decision-making and consultation requirements of the Act. I'm happy to move that. Seconded by the Deputy Mayor. Open it for any comment. Councillor Naylor.
Thank you, Mr. Mayor. This is really useful information, and I was very aware in the May deliberations that there were some quite significant decisions that we were making, particularly around whether to progress the last third of the land value to capital value, and also the change in the UAGC, where we were really making those decisions without having a lot of that information in front of us. And for my part, I didn't speak to the last paper, but I did vote against it, and I guess in voting against it, I think I was very much on the fence in terms of the percentage rates increase that we had got to. It was very close to what I would have been happy to support. But in my view, the broader thinking is around the way that rates take is distributed. And I do have some concerns around those 474 people in the commercial industrial sector who will have a rates increase of over $1,000. I think that the change to capital value, I have always supported that direction of travel, but I am a little bit concerned about the pace at which we've made that change in a time that's very difficult for many businesses and people in our community. So that is a concern to me. So I just really wanted to explain what my reservations were. I realise that when there are losers, there are also winners, and that's great. And I'm sure those people who are having lower rates will definitely appreciate that and get the benefit from that. But at the same time, there are significant increased costs for some ratepayers that does concern me in the current environment. So those are my reservations at the moment. I do appreciate the work that officers have done to bring the overall percentage increase down, but how that's distributed is a little bit of a concern to me.
Councillor Johnson.
Yes, just to bring a little balance to the discussion. I note that there will be 11,328 residential properties that are paying less rates this year. And that is a significant number when there's 17,365 paying more. So I think the officer said it was a roughly 60-40 split. And we don't have the distribution sort of maps, as it were, in front of us, but I would expect with the change to a bit more being levied on capital value and the reduction in the UAGC, that is giving significant relief to those who are on lower value properties. I'm happy with the way that has fallen. And as regards the commercial properties, there will be 724 businesses paying less. again, roughly 40%. So I think when you look at the overall movements in rates, there's not many that are above the sort of 5% increase. There will be some, obviously, but those will be ones that are the higher capital value properties, whether that be commercial or residential. So rates, we always talk about averages, but we do need to look at how the incidence of rates falls and try and make it as fair as possible. And I think that the progress to 50-50 capital land value will definitely have given a fairer distribution of the rates than we had before. And so I'm feeling very happy with it. Thank you.
Colleagues, look, I can understand the debate around the commercial and industrial, and of course I rallied against that when you made an overwhelming majority decision to go 50-50. So I sort of can understand that we've got businesses want surety too. So we're in the third year of that now, and it is what it is. Just with the UGA, that was an interesting one. I did a little survey amongst other mayors, and especially the city mayors, and just this is interesting, most of them are trying to capture around 30%, and most of them are up around $500, $600 per property. I think we're the lowest in the country, certainly the lowest city anyway, so that was just an interesting one to note. But look, it's majority decisions. I'm happy to go. I'm not going to relitigate things. I think we've found, as Councillor Johnson said, a happy medium. So I think we've just got to go where we're going with the rates now. There will be some that get more. There'll be quite a lot that get less too. And of course, we never hear from them. That's human nature. So if we could look to vote on this, please. And that has passed 11 votes for and 5 against. All right, move through to our last agenda item of the council meeting before we go back to finance. And this is around resolutions to authorise borrowing, number 3 in the step of these 3 papers. And again, Steve Patterson, page 51 of your papers. Steve.
Councillors, again, this is a routine resolution that needs to be passed, and just to reinforce the question that was asked a bit earlier on in the budget paper, the sum we're looking to borrow up to is 35 million here, that being the budgeted 45 million or so for the funding of capital programs, less the sum that will be budgeted to repay. So, of course, as is always, we won't borrow the sums unless they're required. If for any reason it ended up needing to borrow more, we'd obviously have to come back to the council. The progress during the year on the way in which that happens, you get updated on that every quarter. Any borrowing that's undertaken on behalf of the airport is over and above the sum of 35 million. And any sums that we refinance are over and above that 35 million.
Okay, thank you, Steve. There don't seem to be any questions. All right, got a number of recommendations here. I will read them out because we have people online. Number 1 is around council authorising the CE to borrow up to 35 million, the borrowing of additional term debt by way of bank loan or loans or credit facilities or other facilities or issue of stock for the borrowing secured by the debenture trust deed 2, that council note the purpose of the borrowing is to carrying out or continue of programs identified in the 2026-27 annual budget. 3, that council note any sums raised and subsequently on lent to the Palmerston North Airport Limited pursuant to the loan agreement between the council and the company will be in addition to the sums to be raised for the council's own funding purposes as authorised above. 4, that council note that the security for the borrowing may be the charge over rates under dementia trust deed if the Chief Executive considers appropriate. 5, that council approve that having regard to the council's financial strategy, it is prudent and reasonable to enter into the proposed borrowing for the reasons set out in the report. 6, the council note that the raising of the borrowing will comply with the council's liability management policy. 7, that council note that the decision to borrow up to 35 million is a significant decision within the parameters of the LGA 2002 and is satisfied that there has been compliance with the decision making and consultation requirements of the Act. I'm happy to move those, seconded by the Deputy Mayor. All right, colleagues, there's no questions, no comments. There is. Councillor Naylor.
Thank you, Mr. Mayor. I won't be supporting this resolution. I think increasing 10% to our debt might look okay now, but moving into a potentially a rates capped environment, we need to remember the impact this has on future rates increase. We've been fortunate that we're in a current environment where interest rates have come down. That's not always the case, and it wasn't that many years ago where we had a 10% rates increase, and part of that was to do with interest rates increasing. So adding 10%, more than 10% to our debt in the current environment, I don't think is appropriate. Capital new programs, which is largely what we need this debt for, is an increased level of service. I don't think that's consistent with what our community has asked of us in the current environment where they're struggling. So no, I won't be supporting this. I don't believe recommendation 5 suggests that this is prudent and reasonable. I simply don't believe it's prudent or reasonable, so that's why I won't be supporting it.
We'll vote. That has passed 11 votes for and 4 against. All right. Councillor Meehan. Against. Okay. So it's 11 for and 5 against. All right. That has, we've now completed our council meeting. Give us a few moments and we'll go over to finance. But thank you for your attendance. Thank you.